Take a look at this close-up of an ATM cash dispenser. In this scenario, you enter your PIN, the screen confirms a successful transaction, and you wait for your money. But a hidden, physical metal plate inside the slot blocks the bills from actually coming out. Assuming the machine simply malfunctioned, you walk away. The moment you leave, a criminal waiting nearby steps up, removes the trap, and takes the cash that was sitting there all along. Many modern scams have shifted away from remote digital hacking toward physical and psychological vulnerabilities. Criminals are now targeting the specific moments when you interact with the real world. This creates the need for a strict survival rulebook. We are going to walk through 5 specific rules for modern banking, focusing heavily on rule number 4, which currently accounts for the rapid loss of life savings across the country. Digital encryption protects your data, but it cannot prevent a physical interception at the moment of withdrawal. The first point of vulnerability is the bank card itself during routine, everyday transactions. Rule number 1, your card never leaves your hands. This applies to everyone, including individuals claiming to be bank employees who approach you outside of a secured teller window. This diagram shows a shimmer, a micro-thin device that fits inside a card reader. When a card is inserted, this device can extract the chip data in under 3 seconds. Rule number 2, always shield your PIN with your free hand. Even if a thief successfully copies your chip data, they still require that 4-digit code to finalize a theft. Tools like microcameras and hidden mirrors are often placed to capture PINs from a distance. Because of this, bank employees are trained to look away whenever a customer enters their code. Retaining physical possession of your card provides little benefit if your secondary access code is visually recorded in public. Moving inside the bank branch changes the threat from hardware theft to software and legal compromise. Rule number 3, never hand your unlocked mobile phone to anyone. This includes legitimate staff members attempting to resolve app issues or update your account. As this flowchart demonstrates, an unlocked banking app allows a user to bypass 2-factor authentication. This provides immediate access to add trusted contacts or install remote software that monitors your activity. Rule number 5, read every document before you sign. It is common to feel rushed by friendly staff, but these papers often carry long-term consequences. Banking fine print can include authorizations for unwanted credit lines, data sharing consents, or fee-based services. You have the right to review these documents at your own pace, or request a supervisor if you feel pressured. Handing over an unlocked device or signing unread paperwork creates permanent vulnerabilities that bank fraud policies are often unable to reverse. The most significant threat today bypasses institutional security protocols by operating entirely outside the traditional banking system. Rule number 4 is the most dangerous scheme currently targeting seniors. Never use a cryptocurrency ATM or kiosk under the direction of an external caller. These scams begin with an imposter claiming to be from the IRS, Medicare, or law enforcement to trigger a state of panic. The scammer will claim that your traditional bank funds are at immediate risk or have been frozen due to a legal issue. They direct you to withdraw physical cash and deposit it into a Bitcoin ATM. They often insist you stay on the phone during the entire process to ensure you do not speak with anyone else. This diagram shows what happens when cash enters the kiosk. Physical bills convert into digital nodes that instantly scatter across a decentralized network. Unlike a traditional bank wire, which can be flagged or reversed, these blockchain nodes lock permanently. Once deposited, cash cannot be recovered. No legitimate government agency will ever demand that you move money into cryptocurrency for safekeeping. The crypto imposter scam succeeds by convincing victims to bypass their own bank's protections and manually remove their assets from the system. Banking security relies on the specific behavioral boundaries you maintain during every transaction. There is an additional institutional safeguard you can use, setting up a trusted contact system with your bank. This map shows the structure. If the bank detects unusual activity, they alert your designated contact. This person can act as an emergency observer, but they have no access to the actual funds. Sharing this information can help others recognize these patterns before they lose their savings. By strictly enforcing these 5 rules, you transition from a passive target into an informed defender of your own financial security.